Stop the ride. I want to get off. Hello again. Thank you for joining me for this edition of Numbers Matter Shorts. And in the first half of the 20th century, we had the Great Depression. Everybody's heard of that. In the first decade of this century, we had the Great Recession. And most of us have vivid memories of that experience. And I'm dubbing what we're going through now the Great Disturbance. President Trump indicated we were going to have a period of economic disturbance, and that was very prescient. We are clearly having a disturbed situation right now. What do I mean by that? Well, we've been into this for 2 months, not very long. And spoiler alert, there's a lot more volatility and disturbance still to come. But so 2 months in, the first month we'll call March, which was before anything had been really implemented or announced. And then the second month, April, which right after Liberation Day, April 2nd, was after the tariffs had been announced, but not fully enacted. But just in that 2 month span, we have seen a lot of ups and downs. They're starting to talk about the difference between soft data and hard data. And I think it's relevant. So that's going to be what I talk about today. Soft data, things that are generated from surveys of customers, households, businesses, things that measure optimism, plans, confidence, expectations. That's soft data. And ever since Liberation Day, the soft data has gone down. Very disturbed soft data numbers. Confidence levels are down, and expectations are down, and plans are on hold, and that kind of thing. Then there's hard data. Hard data is actual numbers. Hard data is things that actually happen. Dollars, pounds, miles, units. Hard data. And those data remain pretty good. In fact, if I look at the hard data, things like GDP, things like inflation, employment, I can't see any sense that we're in recession. If you look at the soft data, a recession is imminent or we're already in one. But the hard data, aside from the GDP, which showed a decline in the first quarter, but I think the weakness was dramatically overstated because almost all of that decline was due to a surge in imports, people buying ahead of the expected tariffs. And that's going to be the chart I share with you right now, which is what happened to the trade balance in the first quarter. It skyrocketed, went straight up. Was the negative on a GDP. And ironically, the whole idea behind these tariffs is to push this number for the trade balance down, to get the trade balance closer to zero or even positive. I have it graphed going up, but that's because I've made negative numbers positive. That's the size of the trade deficit was too high for a long, long time. And in the first 3 months of this year, shot up even higher. So the question is, was a lot of activity anticipated? So we pulled forward a lot of demand for imported products before the tariffs hit. That's the distortion caused by the tariff plan that's been announced. And that's really what happened. So is that a cause for alarm? Not yet. I think those numbers will come back down as we go forward. Some of these inventories, which were also very robust, the build-in inventories, obviously. And that was a distortion. People trying to get in front of these tariffs. I believe that the tariff regime is going to be long-lasting. I believe that it's going to be something we're dealing with for several more years. Now, does that mean we're going to go into a recession? The odds of a recession are rising, but I can't see that we're in one, or the data don't really indicate that we're close enough to call one just yet. So flip a coin is all I'm saying, and stay tuned. There's a lot of data that's going to come out in the next few days and weeks that have to do with these tariffs. Some of it is going to be hard data. A lot of it will be soft data. And then I expect that President Trump will try to get control of the narrative and start pitching his successes. And these may actually be true successes. Some of these trade agreements that I expect to be announced shortly may be very positive for many sectors of the economy and the America overall. Too early to say, too early to call. I can't tell. My sense is that this period now where we're not hearing very much from the Trump administration is actually good news. I think if things were going badly, there'd be a lot of rhetoric coming out of Washington. But I think the fact that things are, the trade representatives and the Secretary of Treasury are just quietly going about their business indicates to me that things are not all bad, that they don't have to sell this idea too much just yet. So we'll wait and see. A lot to still happen. I don't think the roller coaster is over by any means. The combination of soft data and hard data is really always reflected in the financial markets, the stock market, the market for bonds, currencies, futures, that kind of thing. And after some early disruption, there's also been some bounce back. And so interest rates aren't terrible. They're actually maybe down a little bit. Currency, the value of the dollar is down a little bit. Both of those things Trump is actually going to say are positive. So too early to call it bad just yet, but certainly not able to say that it's all working and it's all going to be great. Just have to stay tuned. Thank you again, and stay close to the news. I'll do the same, and we'll reconvene in a few weeks and see where we are. Thank you.